Welcome to Tax Sale Insiders, the latest from Tax Sale Resources, bringing you information about tax sales from experts in the industry. This educational series from TSR was created to assist new investors with the basics of tax sales. In this episode, Brian and Rachel Seidensticker, the founders of Tax Sale Resources, share their knowledge and experience from over 25 years of combined experience in the industry. They share their insights on how to invest, what to look for, and the vital steps in getting started. So sit back and relax for another episode of Tax Sale Insiders, powered by Tax Sale Resources.
So welcome again, Brian and Rachel Seidensticker. Thank you for joining me.
Thanks, Carl. Thanks for having us. We've actually been providing data for over 10 years, believe it or not. So we've been in the industry as a leading data provider for over a decade now. Kind of hard to believe looking back on it, but yeah, we've been here a while.
Awesome. Well, for those who are just joining us, in our last video interview with this dynamic duo, they both spent over an hour talking with me and sharing very clear and comprehensive information on what tax liens and deeds are, why they're important, how they affect the county, how they affect the state, and much more information. So for those of you who haven't seen the first video, I suggest you go back and watch it. But today I'm going to ask the two of you about the first steps in the actual investing process. After, say, I've already decided on my investing strategy and the states that I want to invest in, if that's okay with you guys.
Absolutely.
Sure.
Great. All right, so let's jump right in. When we hear experts talk about research, what does that actually consist of?
It's a pretty wide topic. Research is everything that goes into figuring out what properties or liens you want to buy, right? And that you break down into different buckets, and depending on what your model is, will kind of also help define what you need to look at, what data points you need to look at to make sure, because it's not a perfect solution for everybody. You can go way down the rabbit hole of doing a lot of research on what improved properties and how the structure is and when was it built. When if you're not looking for improved properties at all and you're only interested in vacant lots, then you can ignore that entire section of data. But it really boils down to just everything that you need or should look at as part of your research process, or to decide on what you want to buy or what you should avoid.
So, Rachel, why is the research necessary? I mean, I've been investing for almost 20 years or involved with for almost 20 years, and I hear investors all the time, or so-called investors, newbies coming into the market going, well, why is that relevant? Can I just pick a property? Isn't it going to guarantee to pay? Am I not going to guarantee to make money? Why is research relevant?
Well, I think that research is so key because it allows you to stay away from potential property that you won't get any return on. Also, anytime you go into property, especially on the lien side where you're usually just purchasing the delinquency and gaining a percentage, you always have to keep in mind that you might own that property. And so the research allows you the important step of ensuring that you're getting a quality property, and definitely a property that fits your criteria, but also a quality property. So you're not at the end of that, say, redemption cycle and stuck with a property that you can't get rid of. So understanding the what shape that property's in, the values, and so on is pretty critical if you're thinking long term, especially.
Understood. So does it make a difference whether I'm investing in deeds or investing in liens on how much research I do, or are they equally important to do this type of research?
I mean, I feel like there's some equality there. However, you know, in the lean world, you know, for the most part, as I said, you're investing that delinquency, you earn the percentage, and then you move on. You're kind of diversifying your portfolio that way. You know, deed sales, you know that you're getting that property. You know that's your end goal. So the level of deed research might be a little more full and rich, and you know, have more to it than the lean sales. But again, I think no matter what, even if you're headed down the lean sale track, you need to keep in mind that you might get that property. Correct, Brian? I mean, that's like the biggest thing, because we hear about that all the time, is like, oh, I went to get a percentage, and oh, wait a minute, I, you know, ended up with that property. And some work out and some don't. So it really depends on your research and how that fits your overall scope. So
yeah, and I would agree. I think in general, people do a little more in-depth research on deeds, but I think probably the best way to describe why would be, you know, research is a way of reducing your risk. I think in our first video, one of your questions, Carl, was, you know, can anybody go buy these? You know, and yes, and you could take the money you have today and go buy one with zero research. No one's stopping you from doing that. The question is, are you going to buy something that you know, you get hosed on, or are you going to buy a good investment? You may get lucky and buy a great investment right off the bat without doing any research. It's kind of like you're going to Vegas and hitting black on your very first time. You get addicted, and then, you know, the next 9 times you try, you know, you lose. I mean, that's it's similar, right? So every bit of research you do is risk reduction. And so in general, deeds, a single deed carries a little higher risk because you're investing that much more money in that single asset. Whereas liens, your risk is a little more spread out, and the likelihood of ending up with the property is lower. And so, you know, your tolerance, you know, for risk may be a little higher. But that's a fine balance. There's no perfect answer. Everyone has their own secret sauce, their own way of or data that they look for, and how they go about looking for it. But the key is to do something. The only wrong answer is to do nothing. And so I think that's just the key to keep in mind when you're researching liens versus deeds. Is liens, you got to go through a whole lot more, you know, and everything you do takes time and money, and there's a fine balance of doing too much research on every single lien. It'll cost you way too much, and you won't have time. At the other end of the spectrum, you've got you know, doing no research, and again, every bad lien you buy, every mistake wipes out 10 good ones. So you got to find that fine balance of where it's working for you without being overkill.
Understood. So I hear this often when I talk with people that's involved in the investment world of distressed properties. They use the term research, and then they use the term due diligence. Are they one and the same, or are they different?
I use them interchangeably. You know, and I think due diligence is just that term to kind of drive home that it's on you. Like, and you'll see those warnings across county sites, especially the collecting entities, where they're like, buyer beware. It is on you. It is your responsibility to understand what you're investing in. So it's your job, due diligence. But the research is the key piece to that due diligence. And research can come in a lot of forms and a lot of different ways that you're doing it and what you're collecting, as Brian mentioned. But really, I use them interchangeably because, you know, the research makes up your due diligence, what you should be putting into. It's a protection of yourself, but that's also a requirement. The county's not going to be there to protect you. And I don't mean that against any county entity, because they've got enough to do, but they're not there to warn you like, oh, be careful of investing in that property. They're not going to do that. They just, you know, that's not their job. So
how hard can it possibly be to do research? I mean, isn't it just as simple as just jump and go on Zillow and pull up a property and see what the age is and how many bedrooms in the neighborhood and go, ooh, that's beautiful. I can just invest into that and make, you know, 10 to whatever percentage on liens, or buy this property and, oh my gosh, the market value is $200,000 and it's it's going to auction for $12,000. Oh my gosh, what a markup. This is an easy buy. How hard could this really be? Really?
Well, you certainly can do that, and that's certainly a step in the right direction. It's better than nothing. But I'll go back to every bit of research you do is risk reduction, and with typical real estate, that level of research gets you a long ways. The hard part with tax liens and tax deeds and redeemable deeds, all three categories, is all of the little things you almost never see in traditional real estate. It becomes not regular, but much more common with tax sale properties. Things like the house says it's an improved property, with 3-bedroom, 2-bath, built in 1974, on Zillow, all looks great. In reality, the county demoed it 2 months ago, and so you have to go a little deeper than the basic stuff in order to be successful in the long run. Because if you may get lucky one time, using simple platforms or easy to use platforms. You may get lucky multiple times, but at some point you're going to run into one of those pitfalls, and all it takes is one of those pitfalls and you're underwater overall. And obviously everyone's goal is to be successful, and so going the next level is what most successful investors in this space do. And I guess the further you go in the research, it limits those risks.
Well,
I like to say that it's like diversify. So we talk about diversifying your portfolio, and liens you can kind of do that a little bit more. Deeds you really can too. You can decide diversifying like where you are in the market. But if you're diversifying your research too and understanding where you're getting the information rather than just relying on, say, Zillow, that's an important piece of gathering information, because there's a lot of pieces of information that go into kind of the total package of what you should know about a property.
Well, I'm sure the viewers here are listening, and they're probably kicking themselves that they're not actually on the live with us, but they're probably going to ask this one question, so I'm going to go ahead and ask it. We're talking about this research, and we're talking about the diversity of due diligence and where we need to go and what things we need to do. I mean, I could read that in a book. The benefit of talking with you all, hopefully, is to get some of this insight in a practical solution. So, Rachel, is there any way you can show us what some of this looks like, so we can walk away from this video understanding a little bit about, what does this look like? And I know that this can go deep. Brian and I had a conversation prior to the video, and he was explaining how deep this can go, especially when you're a high-level investor. But just on the surface level, what are just some of the basics things that an investor can do to get started in the right direction? And by no means do I expect you to just go through an entire property today, but I may ask you to do that in the near future and show off some of the stuff that they do. And then, since Brian has created this amazing software that does all of this, maybe we'll twist his arm and see if we can get him to share a video with us over the next week or so, showing us how to do that even deeper, where it's affordable to even a smaller person and not just the hedge funds and the large organizations. So, Rachel, if you have something you could share with us, I'm sure the audience would love to see. How do I do this manually? Where do I go? Where do I begin?
I mean, I think that the key that I refer to are sites that, honestly, we aggregate data from and pull from. And we also know that they're great jumping off places to start those due diligence or research activities. Again, diversifying, figuring out where those come. So I can show at least some of like the county sites across the board that are fairly safe places to start your research. And it allows you to see that, okay, let me back up. Most counties will have a website that, I can show you that you can refer to on your own. Not all of them, but most of them will have some of this. So go ahead.
Awesome. Sounds like we're about to get some good insight. Here we go.
I guess before we kind of dive into those sites, and we can do this after too. I'll leave it up to you, Carl. But there's typically folks have a list of items that they're looking for, and what you can get from each of those sites, varies. So do you want to run through real quick, some of the items that people typically look for, and then Rachel can kind of show where different sources are for some of that data?
Sure, that would be awesome. That would be a great insight, and I think the viewers would love to be able to peek over, a company who's been around for 10 years providing data to get an insight in, where are you getting this data and how are you looking at it? So I think this would be awesome. Yeah, by all means.
The big key pieces in our mind is, people want to know where the property is. They want to know what kind of value it is and the land use. And then you can pick apart all of that. So if you know the location, and a property owner is, some people like to know if it's owner occupied or not, and so forth. So that's kind of that piece together. Values obviously are pretty important, because then you get a general gauge of what the county values that property at, and it allows you to figure out, that lien to value ratio, essentially. Again, looking at long-term if you're stuck with that property. And knowing what the property is, the land use. We've referred to that several times, I know, throughout, videos, but like that's huge to understand if it's actual single family residential or, an improved vacant. Those can be very different as far as what is on that property. And then there's other key pieces, of maybe to get a better idea of what that property's value. You can look at like clerk and recorder, deed information to see what the last transaction was and how much it sold for and when, and know if it has a mortgage on it and so forth. So those are like the key, I guess, pieces, and I can show you kind of some sites that you could go out and find manually for that
Sure.
information.
And Rachel, while you pull up something to share, I just want to ask a question, because it sounds like these are, my background is system processes, so I'm really keen on being efficient. If I have 3 calendars popping up on my phone, I feel like I'm inefficient and I'm not working at the best quality as I can. So is there a lot of sites that I need to go through if I'm doing this? Do I need to go to like the county assessor's office? Do I need to go to, Zillow? Do I need to go somewhere else? Do I need to go, like, how many of these things do I need to do if I really want to get a good gauge? Like, am I going to one site to get all of this information?
It's usually several.
It's usually several.
Didn't mean to interrupt. Yeah, it's usually several. That's why I call it aggregation, because you're taking it from there's no county site has one stop to go to get all this information. It is usually split, and then it's not always just county where you can get some of the information. So
awesome. Okay.
Yeah. Okay. I've got a few sites ready if you want me to share my screen.
Oh yeah, please go for it.
So it's been a while here. Let me do this. Obviously, Google's your friend when you're trying to find, a county site. I have things that I know off the top of my head. We're going to choose, Alachua County, Florida. I apologize if I butchered that name for anyone who's native to Alachua or Alachua. I'm from Montana. So anyway, yeah, so Google's your friend, and obviously you're looking at the taxing entities. So always, finding where to start the tax collector is kind of a first point. And, we will go through these sites, and I have a general idea of usually tax collectors will be handling your vehicle and so forth. So paying your property taxes obviously is your biggest piece. Going to their search site. Florida is really great because everything is online. And you can plug in either by name, address, or the account number that you can get off the raw file. And boom, I don't even know if this is going to work, to be honest with you. But,
right. And this is based on, this is just right now, we've kind of jumped over the where you find the listings and how do I find the listings. This is in the presumption of Carl already has a property that he has in mind. He already has the list, and therefore you're just jumping right into the property. So
correct.
If you don't have a list, obviously you can't jump in and start looking at a property. You need to have a list. So you need to get the list first, right? And if you don't.
Yeah, and most of those advertised lists will have an ID. a parcel ID for you to search by. So
Okay.
that makes, and you know, those property lists that are being advertised for sale are usually coming from the taxing entity, right? The collecting entity. And so they usually match your tax collector site first. So, you know, that's my first stop, basically, is a tax collector. Some tax collectors will have more information than others. It just really depends, you know, sometimes as basic as the tax amount, the tax year, a name and address, and that's what you get. You know, Florida, a bit different. You can get into a bit more in depth, and I know, you know, later maybe we can talk about that as far as what all you can get. But this would be one stop, basically, is the tax collector site, treasurer site, revenue commissioner. I mean, those are all the same names for the same or different names for the same entity. So another important piece would be an assessor. In Florida, they're called property appraisers. So that's, you know, Alex Shua, let me spell a Florida assessor. I know that they're the property appraiser. Boom, we head in there. And again, you know, same type of function. You want to find the key pieces. How do I search? And, you know, this one gives you 3 different options. Parcel number you're usually going to have. Beware that in some cases, the taxing entity and the assessor will have different numbers or formats that they use. You know, we've had to learn that through the years, so that can be challenging. But again, you can go in here, plug in your number and see what kind of information that the assessor might have for you. Usually you get your valuations, you'll get your land use. Taxing entities don't always have that. You'll get your land use, bedroom, bathroom information. Sometimes they'll have last, you know, transaction date, not the mortgage information necessarily, but at least when it was last had a transaction on the books. Sometimes it won't. So assessors sites vary quite a bit as well. So that's one other county place to hop to. The last one would be, you know, if you want to find out about a mortgage, you know, your recorder of deeds, again, that latest sale transaction, you can go to the recorder of deeds or the I just lost it. County clerk, county clerk. So sometimes you can go into county clerk, and these sites are much more rare across the country as far as being able to get into a site. Again, Florida is a great example because you know, most everything is online, but a lot more rare to find this nationwide. So going in here, again, sometimes they have to get more creative. They don't do it by parcel necessarily. They're more specific with name. Or even an address, and then you can go in here and find, you know, different records, so you can look at when it was last transacted and how much, and see if there's a deed, or excuse me, a mortgage on the deed and so forth. So your clerk of court, recorder of deeds, you know, there's a couple different names for that county entity. So those are three real quick to show you. Does that help?
Awesome. Yeah, that's great insight right there. Oh, I'm so grateful for that. That definitely paints a picture of 3 steps anyway that, you know, a good beginner would use versus just using a Zillow or my friend told me it was a good piece of property, right? That's a good way to get started. But Brian, I just want to ask a question really quick. It seems like even though that information is good information, for me personally, that's not enough information for me to put, you know, $10,000, $50,000. I mean, if I was buying a home, I'm knocking on the door, I'm talking to the homeowner, I'm like, let me in, I want to see, because I want to know if the bathroom's toilet's full with cement, or if the house is sinking, or if it's still there, right? I want to know if it didn't burn down last week. So how deep does, I know you deal a lot with large funds and hedge funds, and thank you all for sharing this information to our smaller investors, but how deep do they go sometimes? Like, do they just do those high level, or do they get deeper?
Well, it's all risk reduction, right? And that, you know, those are 3 sites that are, you know, great sources of information. But in many cases, you know, sites like Zillow or similar sites like that have that plus more. And you're really, at least from a deed perspective, you're barely scratching the surface as far as everything you need to know, or you should know, on a property before you make a purchase, assuming you want to minimize your risk. So, I mean, I'll start with what, from a tax deed perspective, because in some ways it's a little more straightforward with real estate than it is for liens. And in liens, it's kind of a that plus more, or a truncated version of that plus more, because it's all about volume with liens. So, I mean, I kind of put research in two buckets, right? There's property characteristics, which is what you get from the tax collector and the tax assessor, and then you start. The other bucket is more title aspects or other risk, that's your exposure, and that's where the clerk comes in. You can, it's like doing a title search, right? And those are great from a desktop due diligence standpoint. But then ultimately, you always have a need to know what is the actual current state of the property. And so, doing a simple thing like driving by the property to make sure it is what the county or whatever your research says it is. That should almost always be included. Either you or hiring somebody to do that should always be part of the due diligence, especially for real estate, just to know what the actual state of the property is. Because as Rachel mentioned, it's buyer beware, right? Meaning that county is not responsible for any of their due diligence, even if their data is wrong, right? So the county can say it's a 3-bedroom, 2-bath, perfect, property, but when you do the inspection, drive by, lo and behold, it's burnt out or it's been demoed, and obviously, your decision on buying that property would typically change just drastically at that point, right? So you always need to at least get an idea of what you're buying. Otherwise, if not, it's a much higher risk. And then, in what order you do all of this, is kind of part of your secret sauce as you kind of put together your investment model. But the other end of it is the title search, right? Knowing what other exposure you have on it, because beyond the state of the property, physically, you've got the state of the title, and are there other liens that won't get wiped out as part of the foreclosure process, or are there other fines that are sitting out there, like code violations, et cetera, that won't get wiped out, or you can get really detailed of IRS liens that come up that also aren't wiped out, and so you can get extremely detailed from a tax deed research perspective. Now, obviously, all of those come with cost, right? Inspections can be anywhere from $15 to $50 a property. Title searches can be anywhere from $40 to $300 a property, and so you've got to kind of build your secret sauce to say, okay, I'm going to do these, and then I'm going to do these, and then I'm going to do these, and then all of that kind of helps you filter down properties to those that you're looking at. I mean, I had a really one of institutional funds we work with shared some pretty cool numbers that I found, and they looked at almost 40,000 properties a year, and through all of their due diligence process, they may bid on 300 and they end up buying 75. So they look at 40,000 properties, at least from the list that are released. They look at 40,000 and they narrow it down to 75 they buy each year. So that each one of those steps helps them narrow it down further and further until they get very comfortable with the property that they're buying, and it's definitely going to be something that they want to own.
Well, so Brian, real quick, I want to interject real quick, because Rachel just kind of showed us just a high level touch points of the property, and I can't even fathom the amount of employees a fund would need to run through 40,000 properties in the process that Rachel just did. So tell me there's another way to do this without me sitting in front of Google for the next 40 days and 40 nights like Moses. Like, tell me there's another way to do this, right?
Yeah, well, I think you mentioned it's automation, right? All these, these guys have automated the process. So yes, looking at each one of those individually will take you forever. Can it be done? Absolutely. Is that the best use of your time? That's up to you. Do you have a chance of looking at 40,000 properties a year to have that same level of success? like you said, unless you've got, you know, a bunch of interns or a lot of people, a lot of time on your hands, that chance is pretty slim. And so it's all about automation, right? How can you gather all of that information as quickly, as easily, and as cheaply as possible?